Welcome to the FitBucks YouTube channel. I'm your host, Joseph Ranke. Today we're going to be discussing how to very quickly increase your credit score. Specifically, I want to be talking about one of the biggest factors, if not the biggest factor in determining your credit score. It's the credit utilization ratio. Okay, so we're going to be diving into what that is, how to manage it, so that way, like a strategy on how you can increase it, what to do, what not to do, basically. Some secrets in there, like if you own a house, how you can actually increase your credit score very easily. All these types of things. I'm going to go through some questions with you as well that we typically get about the credit cards and utilization ratio and all that. Before I dive into the episode, I do want to, please ask you guys, if you're not subscribed to the channel, please subscribe, hit the notification bell so that way you're notified when new videos come out. One, it helps our channel grow. Two, it helps you understand finances as we put out more and more videos. And three, at the end of the day, share this with your friends as well, because if you have these questions, I'm sure they have their questions as well. So it's a win-win situation for everybody. With that being said, let's jump right into it. Credit utilization ratio. First of all, the stuff that I'm going to go through with you today, when I figured this out in my early 20s, I did these strategies, and my credit score ended up going through the roof. And even today, it's like I could borrow $20,000 on my credit cards and my credit score is still going to be like an 830. And it's like, well, why? There's a number of factors that go into your credit score, but the credit utilization ratio is one of the top, if not the top thing going in. Now, nobody knows what's number one because the credit bureaus don't tell you, but based on statistical data and analysis that companies have done and trying to back solve into it, that's what they find out, is the utilization ratio is a massive factor. So what exactly is this thing? What exactly is the credit utilization ratio? Okay. Let's just say you have a credit limit on your credit cards of, say, $10,000. If you have a credit utilization ratio, or let's just say you have outstanding like $1,000. So you borrowed and you put $1,000 on your credit card and you have a $10,000 credit limit. 1,000 divided by 10,000 is 10%. That is your credit utilization ratio. Okay? And this is very, very important because once you get past a certain ratio, then the credit bureaus really start hitting your score, okay, or improving your score. So what are those typical thresholds based on research, based on what people have seen? Like if you get over 30% utilization ratio, your credit score is going to tank. Why is that? Well, the way the bureau looks at it is you have this line of credit available to you and you have a large chunk of it outstanding, like you're borrowing against it. In their eyes, that tells them you need money and you're a higher risk. Therefore, they drop your credit score, okay? Typically, from what I've seen, like if you're below like the 5 to 10% ratio, your scores should be okay. Once you get to like 10 to 20%, you'll see like a slight hit. 20% and above, you're going to start seeing your score hit really, really hard. Okay. If you want to increase your credit score the most, having no balance on it, paying it off every month is going to really increase it. Okay. So how do you build up a strategy to increase your credit limit? Well, first of all, if you already have credit cards outstanding, go back to them and say, hey, will you increase my credit amount, my credit limit? And a lot of companies will, okay? Depending on how long you've had them and depending on what your income is now, depending on your current credit score, they may increase that credit limit, okay? Right now, when I'm recording this is May of 2023. Might be maybe a little bit difficult to increase the credit limit just because of what's going on with the economy and everything. A lot of credit card companies and banks are making it harder to get credit limit increases, but it's always worth trying, okay? Now, the strategy that I'm going to go through with you now is one that I personally did, and I want to make sure I want to point out this, and I'm probably going to point this out twice. You're only going to want to do this strategy if you have like 2 to 3 years before you're going to need your credit, okay? So like if you're going to buy a house in 3 years, you can do this over the next year, year and a half. But stop doing it about a year before you actually buy the house or buy a car. Okay, so I'll give you an example. When I first did this strategy, I was about 22 years old, coming out of college. I knew I wasn't going to be buying a car. I already had one. I knew I wasn't going to be buying a house because I wasn't making any money, so I couldn't buy a house. I basically didn't need to use my credit. So I was preparing for like 5 to 10 years down the road when I would need my credit. Okay. And what you do is, what I did was I opened up a credit card every quarter, a brand new one. Okay. And the very first credit card I opened, I basically researched which one would give me the most points, all that type of stuff. That first one I opened was my main credit card. That's the one that I was going to be using like for basically for forever. So for me, that was actually my Amex credit card. I've had that open now for like 20 years. Like I use it all the time. That's the stuff that we use daily. Okay. Then once a quarter, I would get offers from other credit cards. Like if you spend $3,000 on your credit card in 3 months, you're going to get an extra $50,000 or 50,000 points. So I take those offers once a quarter and I would open up a new credit card and I would hit that dollar amount to get the max bonus. And then I would just never use the credit card again. But what does this do? Let's just say I had one credit card with a credit limit of like $5,000 and I would put about $1,000 on my credit cards per month or at a time. That's like a 20% ratio, right? Well, like if I open up another credit card with another $5,000 limit, now I have $10,000 available to me, but I'm still only taking out about $1,000 a month. That means that I'm only at a utilization ratio of about 10%. So I just went from 20% to 10% in terms of a credit utilization ratio. Okay. Plus, I would get points. I would get the bonus points, right? So at like one time I opened up a Southwest credit card and I was flying from NorCal to SoCal constantly, almost every week. Okay. I ended up getting something like 7 round trip flights in points because of that credit card. Okay. So, but that's what you do is once a quarter, you open up a new credit card, okay, and then you get the points, and then you just never use a credit card again. So I did that over like a 2-year span. I ended up with 8 or 9 different credit cards, okay? So at the end of that period, I had something like $75,000 or $100,000 of credit available to me, okay? Now today, I don't open up new credit cards. I just increase the credit limit, so it's something like $500,000 in credit available to me. That's why I was saying earlier, I could put $20,000 on a credit card and it's not going to hurt my credit score at all. Whereas with a lot of people, it would just destroy their credit score. Okay. So those are some tricks. Now, one thing you need to be cognizant of is that some of the credit cards, if you don't use them every so often, they'll actually close your accounts. And so to avoid that, like once a quarter, I go through and like you see this stack of credit cards, like this is all of them. Like I literally take them and I'll, when I'm at my computer and I'm buying something on Amazon for $5, I will use that credit card like once a quarter, once every 6 months, once every 9 months, just to keep it active. Because you also don't want them to close the card because closed cards will hurt your credit score, but it also drops your credit utilization ratio. So you don't want that to happen either. Okay. So that's just one caveat. Now, I mentioned to you guys that I would give you one secret if you guys own a house, okay? And then I'm going to go to like 2 or 3 popular questions that we get oftentimes about this. If you already own a house, for example, you can take out a line of credit on that house, a home equity line of credit. And on your credit report, it shows up the same way as a credit card does. So if you take out the line of credit and you don't borrow against it, that it helps your credit utilization ratio when it comes to your credit score. Plus, it's also good home ownership stuff just in case of an emergency happening. So I definitely recommend taking out a HELOC. I'll put a link in the description to a video and some articles that we write about that. But that's some trick you can use to manipulate your credit score if you already own a house, is that line of credit. All right, now, some questions that we typically get. Is the credit utilization ratio calculated on a combined limit of all my credit cards or on an individual basis? It's all your credit cards combined, okay? How high can my credit utilization ratio get? Like I said, before it's affected. I mean, 10, 15, 20%, you go above that, it's going to start affecting it. Last question that we oftentimes get is what balance outstanding is used to calculate my credit utilization ratio? That's actually a really good one. We don't think about this, okay? Historically, like your payment date that you actually had to make your payment for your credit cards and your statement date wasn't the same date that the credit bureaus necessarily took to calculate this ratio. There are two different dates. So you could be the type of person that pays off your credit card every month, and you might think that my credit utilization ratio is 0 because I always pay this off. But that might not be the case, because they might actually take that ratio midway through the month, but your payments, you don't get the bill and the payments aren't due till, the end of the month. So nowadays, most credit cards actually have those two dates the same date, but they're not always that way. If your credit cards are not that way, one, you just call up your credit company and say, hey, how's this done? They'll tell you. If it's not done that way, then you can ask them to switch the date and they'll do it for you. Okay. But that is the video on how to increase your credit score the fastest using the credit utilization ratio. Like I said, as always, guys, like, subscribe, hit the notification bell. See you guys in the next video.